One crucial vote expected tonight could reverse a 30-year-old Supreme Court ruling and change the way credit card companies lend money to you. Did you know that right now transactions are governed by the location of the bank, not the location of the customer? That's a loophole banks have exploited to raise interest rates. Senator Sheldon, Whitehouse, and a handful of co-sponsors to his amendment call it unfair. So will it be the latest change to Dodd's bill to hit Wall Street? Eliot?
Joining us now is Democratic Senator Sheldon, Whitehouse of Rhode Island. Senator, thank you for joining us.
Good to be with you, Eliot. How are you?
Wonderful. You know, explain to us quickly, what does your amendment do and how will it protect consumers?
It restores the traditional powers that the states have enjoyed since the founding of this country to protect their own citizens against exorbitant, outrageous interest rates. And as the lead-in to this said, there was a Supreme Court decision about 30 years ago that created a loophole, and the big Wall Street banks took advantage of that loophole. So now, even if your own state maintains good, solid consumer protection laws that protect against high interest rates, the out-of-state big bank can parachute in its pitches to you, notwithstanding your own state law. We want to put the states back in charge and put the corporations where they should be, which is under the law and not controlling it.
And have you calculated how much you think this would reduce the average interest rate that is facing consumers if your amendment passes?
The worst interest rates are the 30% and over interest rates. Most states that still regulate interest rates are in the 18 to 21% range for their cap. So it would be a solid, what would that do the math, 12 to 10% reduction at of the highest rates, of the penalty rates, of the ones that they throw you into when you get caught up in all the tricks and traps in your credit card contracts.
Now, in pushing this amendment, you sound very much like what you used to be, which is the Attorney General of your state, not a United States Senator. Traditionally, those who go to Washington are increasing federal power. You're basically saying we want power to go back to the states to increase the state capacity to regulate the banks. How many co-sponsors share your perspective, and how do you assess the likelihood you're going to get this amendment through today?
There are 16 of us who are co-sponsors. They include a Republican, Thad Cochran of Mississippi. I'm not sure we'll get it today, but I'm hoping that we can work it to a 50-vote margin. I think with a 50-vote margin, we should be able to win this thing. And that will make a real change for consumers for the better. Obviously, when you're up against these big banks, it's not easy, but we've got a real shot.
What is the argument they're making? Well, how can they object to a state stepping in to set limits on the interest rate charged to citizens of that state?
They make the argument that it creates a patchwork of regulation and interferes with their business model. And when you consider the way in which their business model has harmed consumers all around the country and been abused by them to run up these unbelievable interest rates, I'm not sure it's a business model that needs much protecting.
Well, I think first, if we can put up on the screen, there's a chart that shows how bankruptcies, individual bankruptcies, have skyrocketed since the Supreme Court decision 30 years ago. So clearly, the amendment you're seeking would do an enormous amount to help consumers in that regard. But as you point out, their business model, if I'm not mistaken, caused the largest economic cataclysm in 70 years, so I'm not sure we want to be investing in that business model anymore. Let me ask you this question. The OCC, the Office of the Comptroller of the Currency, part of the federal government, part of the Obama administration, has it weighed in on this amendment?
I have not heard from the Obama administration on this amendment one way or the other. I think I have a clear field and hope to take full advantage of it. Because love to have their support if they want to push in at the last minute, too.
I would love to see that. You and I were participants in a litigation a couple years ago, again, trying to permit states to exercise jurisdiction over national banks. In that context, get information about predatory lending. In that case, the OCC was on the wrong side. And so I'm hoping that we will see some sensibility shift on the part of the regulatory agencies that until now have really not been helpful in this regard. Do you... Go ahead. I'm sorry.
I was just going to say I agree with you. Particularly in the past decade, a lot of the regulatory agencies have been captured by the industry, and instead of being watchdogs, they were being lapdogs. And I think they've woken up a bit now, but we need to make sure they're on the consumer side.
You raise the issue of industry capture. Certainly one of the most important, I would argue, the most important regulatory entities out there that failed to live up to its mandate was the New York Fed. Looking at what we are doing with the Fed, the governing structure of the Fed in the financial regulation bill that you're going to be voting on over the next couple of days, do you think it goes far enough in both shedding light on what goes on at the Fed and secondarily, or perhaps more importantly, changing the governing structure of the Fed?
I think it's a very, very important step in that direction. As you know, for a long time, the Fed was sacrosanct. And it was sort of like a temple, and nobody was allowed to approach it, and they just did whatever they wanted. The Sanders bill that allows for an audit of the Fed is really a pretty strong shot across their bows, and I think sends a very good signal that they've got to be more alert to their consumer protection responsibilities. They can't just be there to facilitate the banking industry.
Senator Whitehouse, thank you so much for joining us. Good luck on that vote, whether it's tonight or in the next couple days.